Looking for smart, low-effort ways to grow your wealth? ETFs, exchange-traded funds, offer a powerful solution. From broad market mainstays like the S&P 500 and NASDAQ 100 to high-growth tech or global funds, there's an ETF for every investor. In this video, I'll reveal the top ETFs performing well in mid-2025, why they're poised for more gains, and how you can build a balanced portfolio tailored to your risk and goals. Ready to invest smarter? Today we will talk about the best ETFs to buy right now. So before we start, make sure to hit the like button and subscribe to my channel. 1. Core U.S. market exposure. For long-term investors, owning a diversified slice of the entire U.S. market is often the smartest starting point. The Vanguard Total Stock Market ETF, VTI, is an ideal option, offering exposure to over 4,000 U.S. companies across all sectors and market capitalizations: large, mid, small, and micro-cap. This breadth gives investors a well-rounded foundation with minimal fees. VTI's ultra-low expense ratio makes it highly efficient for passive investors, especially those employing long-term buy-and-hold strategies. It captures the overall growth of the U.S. economy, including not just the mega-cap giants like Apple and Microsoft, but also thousands of smaller firms contributing to innovation and regional growth. Compared to investing in individual stocks or trying to pick sector winners, VTI offers simplicity, scale, and balanced risk. Its long track record of delivering returns in line with the broader market makes it a trusted ETF in many model portfolios. 2. Large cap focus. S&P 500 ETFs. For investors seeking exposure to the largest and most stable U.S. companies, ETFs that track the S&P 500 index are a prime choice. The SPDR S&P 500 ETF (SPY) and the Vanguard S&P 500 ETF (VOO) are two of the most popular. These funds invest in the 500 largest publicly traded U.S. companies, representing about 80% of the total value of the U.S. stock market. They include sectors such as technology, healthcare, financials, and consumer goods, providing a comprehensive snapshot of the American economy. Both SPY and VOO are highly liquid, widely used by institutional and retail investors, and come with low fees. They offer an excellent way to gain exposure to companies like Microsoft, Apple, Amazon, and Johnson & Johnson. Over time, S&P 500 ETFs have provided consistent returns, making them a go-to choice for retirement accounts, long-term portfolios, and tax-efficient investing. 3. Technology growth. Investing in innovation. Technology continues to be a major growth engine, and investors looking to capitalize on innovation often turn to tech-focused ETFs like the Invesco QQQ Trust, QQQ. QQQ tracks the NASDAQ 100 index, which includes 100 of the largest non-financial companies listed on the NASDAQ exchange. This index is dominated by leading tech names such as Apple, Amazon, NVIDIA, Meta Platforms, and Alphabet. As artificial intelligence, cloud computing, and digital transformation continue to shape industries, the companies in QQQ are often at the forefront. While this ETF tends to be more volatile than broader market funds, it has historically delivered superior long-term returns. Investors who are bullish on future innovation and willing to accept short-term fluctuations may find QQQ an ideal growth vehicle. Its focus on sectors such as technology, biotech, and communications makes it suitable for investors who want to tilt their portfolios toward cutting-edge industries. 4. Dividends and income-oriented ETFs. Income-seeking investors often prioritize ETFs that focus on dividends and shareholder returns. Funds like the Schwab U.S. Dividend Equity ETF, SCHD, and the Vanguard High Dividend Yield ETF, VYM, provide a way to earn regular income while maintaining stock market exposure. SCHD, in particular, screens for companies with strong dividend histories, stable earnings, and financial strength, making it a favorite for long-term investors. VYM focuses on high-yielding stocks across all sectors and is well-diversified. Both ETFs offer lower volatility compared to growth-oriented funds and are often used by retirees or conservative investors looking for cash flow. Another interesting choice is the Invesco Buyback Achievers ETF PKW, which tracks companies aggressively repurchasing their own shares. These buybacks can be a sign of management confidence and a way to boost shareholder value. Dividend and buyback ETFs also offer some downside protection during volatile markets, as steady income streams can help smooth returns. They are excellent complements to growth ETFs, especially in balanced portfolios. With interest rates uncertain and inflation still a concern, high-quality dividend ETFs provide a valuable blend of income, stability, and potential capital appreciation. 5. International and emerging markets exposure. While U.S. markets dominate global investing, international and emerging market ETFs offer vital diversification. Funds like the Vanguard FTSE Developed Markets ETF VEA provide exposure to developed economies in Europe and Asia, including countries like the UK, Germany, Japan, and Australia. These markets can perform differently than the U.S., offering portfolio balance during periods when American stocks are underperforming. For more aggressive investors, the iShares MSCI Emerging Markets ETF EEM or Vanguard FTSE Emerging Markets ETF VWO opens the door to growth opportunities in countries like China, India, Brazil, and South Africa. Though more volatile emerging markets tend to offer higher growth potential due to expanding populations, rising middle classes, and increasing consumption. Currency fluctuations and geopolitical risks can affect returns, so these funds require a longer investment horizon. Global ETFs that blend both developed and emerging markets, such as the iShares MSCI ACOI ETF, give investors a comprehensive view of the world economy. 6. Sector-specific ETFs, semiconductors and AI. Investors interested in targeting specific growth themes often look towards sector-specific ETFs. One hot area right now is semiconductors, with funds like the VanEck Semiconductor ETF (SEMA) and the iShares Semiconductor ETF (SOXX) attracting attention. These ETFs focus on chipmakers such as NVIDIA, AMD, and Intel, companies essential to everything from smartphones to AI. As artificial intelligence, electric vehicles, and 5G technologies expand, demand for semiconductors is exploding. These ETFs have shown impressive returns but can also be volatile due to the cyclical nature of the tech supply chain. Another rising area is artificial intelligence itself. ETFs like the Global X Artificial Intelligence and Technology ETF provide exposure to companies building the future of AI, including software firms, data infrastructure providers, and robotics innovators. These funds allow investors to ride long-term technology waves without trying to pick individual winners. 7. Inflation protection and alternative assets. To protect against inflation and add diversity beyond traditional stocks, investors often turn to commodity and real asset ETFs. Gold, in particular, has long been seen as a hedge against inflation and economic uncertainty. The SPDR Gold Shares ETF (GLD) offers a simple, liquid way to gain exposure to the price of gold without physically owning the metal. It can act as a portfolio stabilizer during periods of market volatility or when interest rates are fluctuating. For those looking for more aggressive trades, leveraged ETFs like the Direction Daily Gold Miners Bull 3X ETF provide amplified exposure to gold mining stocks, though with significantly higher risk. Real estate investment trusts, REITs, accessible via ETFs such as the Vanguard Real Estate ETF (VNQ), are another alternative. They provide income through dividends and potential growth from property value appreciation. These assets tend to behave differently than stocks and bonds, helping to smooth out portfolio performance over time. But if you like this video and would like to see more like it, please give it the thumbs up, leave a comment, and click the button to subscribe.